This conference will now be recorded.
Welcome to the lesson on investing for retirement. In this video, we'll cover the investment basics, selections available in the plan, and how to get help if you need it. Regarding the investment construction, the investments offered in your plan are what are known as mutual funds. Mutual funds are investment vehicles that are made up of a collection of stocks, bonds, and/or alternative investments. For those of you who are not aware, stocks or equities are ownership shares in a company. Stock will increase or decrease in value based on the value of the underlying company. Bonds or fixed income are the other primary investment type and are debt issued by companies or governments. With bonds, investors lend money in exchange for interest payments that they'll receive while the money is being lent. Some mutual funds will utilize other alternative investments such as real estate, commodities, etc. These investments can provide additional diversification for your portfolio, but may require additional research if you're unfamiliar with how they operate. Now that we have a general understanding of the primary types of investments, let's take a look at portfolio construction. The graph shown illustrates historical performance of various asset allocations dating back to 1926. Allocations range from a 100% bond portfolio to a 100% stock portfolio. For each asset allocation, we have listed the average annual return in addition to the best performing year and worst performing year. The general takeaway here is that it's important to know that bonds tend to be more conservative investments with less fluctuation as compared to stocks, which are more aggressive investments. That said, while stocks tend to come with greater risk, they also tend to provide higher average returns in the long run, especially when you're looking at periods of 10 years or more. Putting this to practice, those who are farther from retirement with more time to ride out the risk may want to consider a portfolio heavily weighted towards stocks to take advantage of those higher expected returns over time. Whereas those who are closer to retirement and have less time to ride out the risks, you may want to consider a higher allocation towards bonds in your portfolio. Keep in mind that while this chart does include the extreme ends of the spectrum, most individuals are going to be best somewhere in between with a blend of stocks and bonds to take advantage of the added benefits of diversification. A list of available investment options can be found by logging onto the MVP website and selecting Advice and Performance located under the Learn tab. This page will provide information including expense ratio or the cost to invest in each fund, as well as performance metrics through the most recent month end. For additional information, you can click on the icons under the links column to download the fund information and be directed to a website called Morningstar, which will provide everything you would really want to know about a particular fund. So with the 401k plan, you are in charge of managing your investment allocation, but there are options to get you help if you need it. For the do-it-for-me investor, you may want to consider a target date fund, which is a fully managed investment option that gradually becomes more conservative as you approach retirement. For the help me do it investor, we would recommend checking out the Smart Plan tool, which will provide you with custom investment advice based on your personal situation and risk tolerance. The target date funds are your plan's default investment option, meaning that all contributions will be invested into the age-appropriate fund unless you log in and elect otherwise. These funds operate by taking your year of birth and projecting that out 65 years to an estimated targeted retirement year. For example, let's consider an individual born in the year 1980. As we can see, they would be defaulted into the 2045 target date fund, as this is the year they would be turning age 65, likely very close to, if not already, retired. As mentioned before, these funds gradually get more conservative as you approach the target retirement year. Taking a look at the chart, which plots equities or stocks in blue, and it plots fixed income or bonds in green. Sticking with our example of an individual targeting a retirement year of 2045, we can see that now, while they are farther from retirement, they are more heavily weighted towards stocks. However, as they get closer to retirement, the allocation begins to shift towards bonds. This ties with our earlier point that individuals with more time on their side can afford to take greater risk in hopes of achieving higher average returns. However, as our time horizon shrinks, the ability to take risks begins to diminish. The main reason is that if we were to have a severe market correction, you don't have as much time to let your account recover. Often the majority of individuals choose to stay in this default option and have the investment decisions made for them. If you decide that you would like to move out of the target date funds but are not comfortable selecting the investments on your own, We'd encourage you to walk through the Smart Plan tool located under the Learn tab on the MVP website. This tool will provide custom investment advice based on your financial situation and risk tolerance. The tool is available free of charge and generally takes about 10 to 15 minutes to complete. To make investment changes on your own, simply select Your Portfolio under the Manage tab. Here you have the option to change your investment allocations by selecting Portfolio Rebalance. You do also have the option to set up auto rebalance if you would like, or make investment transfers between funds. Simply click Take Me There to bring up the list of available investment options. The column titled Balance will list the current balance you have in each investment, and the column titled New Percentage is where you will need to enter how much you would like to save and invest in each fund. Be sure to implement your changes by scrolling to the bottom of the page and clicking Submit Realignment. This will realign your current portfolio. If you would like to have all future money invested the same way, be sure to select Realign Future Elections as well on the next page. If you're interested in receiving additional guidance based on your personal situation, you can call or schedule a Zoom meeting with a representative from Gordon Asset Management, who is the advisor on the Sears Contract 401k plan. To do so, simply go to wealthqb.com and click Schedule an Appointment in the top right-hand corner. For general questions about the plan, you can reach out to your HR contact or plan service providers listed here. MVP, the record keeper and administrator on the plan, will be your go-to for any and all operational questions or transactional questions, as well as your go-to if you need to submit a distribution or rollover form. Gordon Asset Management, the advisor on the plan, will be your go-to for any and all questions related to the investments or retirement planning. So this concludes the Investing for Retirement lesson. Thank you for listening.